Yeah, good day. Well known to everyone, and I'm so excited that you are here because I'm about to share with you some deep secret for successful forex trading. Deep secret. I won't take much of your time. Why? Because I want to share what I've been using. I want to share my experience, 6 years experience, 6 years plus experience on forex trading, and it has always proved to be so. That's always proven to be accurate. You see, I'm not just doing video for doing sake. I'm doing it because I want to impact life. I want to teach people out there. So guys, if you don't mind, if you have not subscribed to the channel, do well to subscribe and then share with your family and friends. Let them know that there is a place that they can get free information and it's actually accurate and precise. Please share and also tell us in the comment section what you think about this video and where we can actually help you in forex trading. If you want to join my group on WhatsApp, fine, also signify and I will definitely add you. Thank you so much if you have done that. So now I'm sharing 5 deep secrets for successful forex trading, and the first one is that you need to master risk management. You see, I always emphasize about risk management. Risk management is not a strategy. Please, management is beyond strategy. Is beyond a strategy. Why? Because you need to protect your capital first before you gain what? Profit. If your capital is at stake because you are making profit, you want to make profit, sorry, then there is problem with your risk management. Why many traders don't stay in the market in forex for a long time is because they don't understand the secret of risk management. You need to first of all target to protect your capital before you make profit. If your capital is being is under attack, then you cannot make profit. This means that you should never risk more than 1 to 2% of your account on a single trade. Never risk more than 1 to 2% of your account on a single trade. You need to learn to use stop loss always so that you can define your maximum acceptance of what? Of loss before entering the trade. You need to first of all determine your stop loss, because your stop loss is giving an idea of a perfect risk management. If peradventure the trade do not go to my favor, what then should I lose? And your stop loss should always be 1 to 2% of the entire capital. Don't forget this. So the proof of this is that professional traders at hedge fund or pro firm survive and grow through strict risk control, not lucky big win. They don't talk about luck. We're not talking about luck here. I have studied that most at times, or all the time, pro firms and hedge funds always survive on risk management. That is why even if they give you pro firm account for you to trade and then your loss exceeds a level, you will be out. You'll be out of the game, and that is how it is. So guys, master risk management, because risk management is not a strategy, it is a lifestyle of a trader. The second one is you need to trade with the trend. I always advise us, never you trade against the trend. Why? Because market will definitely move with the trend. Market will definitely move with the trend. The secret is very simple, that the trend is what? Your friend. And this is not a cliche. This is not let me just say an advice. No, this is just the truth. The trend is always, the market always move in a trend, and if you follow the trend, you will not lose because you are following the market. This is a survival law in forex. Most people that trade against the trend always end up blowing their account. They always end up losing their account. And how can you identify the trend? Very simple, by using moving averages. Moving average 50 and moving average 200. Moving average 50 and moving average 200. Once there is a cross in the moving average 50 to the moving average 200, from bottom to up, then we are going for bullish movement. And if you see a cross from the 50 moving average downward to the 200 moving average, it means that we are going forward a bearish movement. So put it at the back of your mind. This is actually one of the simplest way for you to understand the trend. And make sure you trade along the trend. Also, look for higher high and also higher lows for you to buy, and reverse for the sell. So as you are trading with the trend, you look for where there is pause in the price movement, and that pause has to do with the higher high and then the higher low. Those are the pause in the market. When you see the pause, then you can identify your entry point. So what are the proof for this? You need to what? You need to backtest. So backtesting shows trend following strategy have a much higher success rate in trading markets compared to choppy ones. So you need to what? You need to stick to trading with the trend. So the next one, guys, just watch this video to the end and learn. I know it might be boring, but you need to learn. You need to learn. You need to learn every day. Don't trade every day. That's one of the secrets. Like today, as I'm making this video, I did not trade. Some people will be like, you did not send signal to the group. What happened? You did not trade. And I'm having my battery intact, but I did not trade. Why? Very simple. I have learned not to trade every day. I only trade the best setups. When I don't see a clear setup of demand, supply, double top, double bottom, any kind of good setup, I don't trade the market. And most times, like these days, Mondays, you might not see a very good setup on Monday, so I don't disturb myself if I don't see a good setup. I don't trade. Learn not to trade every day. Don't trade every day. What's the secret? Discipline means waiting for a plus setup, not forcing trade every day. You need to wait for exceptional setup that you know that when you enter is a go. But mind you, not all setup are 100%, but most setup that you wait for, that you enter conveniently when you have check all parameters, you end it up in what? In profit. So guys, always wait for setup. Don't trade every day. Wait for the best setup. You need to create a trading plan. Have clear rules for entry, for your stop losses, and for take profit. You need to what? Have a trading plan. And in your trading plan, three things are essential. Your entry point, your stop loss, and your take profit. And make sure you stick to your trading plan. Don't go against the trading plan. You need to stick to the trading plan. And then you need to look for confluence. You need to combine trend plus support and resistance and candlesticks as signal. You need to combine this. So the combination of these is what we call the confluence, whereby three or more identification parameters have come together to play. So that will be a perfect entry and exit point. That will be a perfect stop loss point. So these are actually what you look out for. And then what are the proof? Trading journals from successful traders shows that fewer high quality trades are more profitable than frequent low quality trade. So you need to focus. You need to focus. You need to focus. I have been in this journey for a long time, and I have understand that it is better you have high quality trade and be profitable than for you to have low quality trade and blow your account and lose your money. Number 4, we have backtest and forward test your strategy. You cannot have a strategy that you have not tested. And don't just back test the strategy, also what forward test your strategy. What do I mean? Strategy must be tested. Not all strategy are 100%. We are sure of it. We know. But the secret here is that confidence comes from data and not from what guesswork. Confidence comes from data and not what guessing. So backtesting will help you to check history of data and what they actually achieve. And for testing, using the demo account will help you in order for you to perfect the strategy before you enter the live market. Before you enter the live market. So you need to forward test and you need to back test. Forward testing for at least 3 months, backward testing for at least 6 months. So what is the proof now? Hedge fund and smart traders backtest all strategy extensively before trading real account. Just like the way I used to release those videos of those strategy are not in a haste. I don't release video in a haste. I make sure I trade it personally and then backtest, forward test, and make sure it's going to serve before I release it on YouTube. So if you're on YouTube channel, my YouTube channel, you are actually lucky because those strategies are tested and trusted strategies. So hedge funds and smart traders backtest all strategies extensively. And the last one, control your emotions. Control your emotions. Control your emotions. Emotions has been one of the major problem of traders, especially beginners traders. You see, greed and fear is normal, and greed and fear is as a result of emotions. Greed and fear are as a result of emotions. So the secret there is that your mindset can make or break even the best strategy. Your mindset, you need to have a good mindset. Never you fear a trade. There are times that when you enter a trade, you see it's going against you, and that does not mean that it will definitely go against you. No, it might be that the market makers are trying to give some fear in the market for traders, retail traders. It might be that they're just trying to touch their stop losses, but most times fear will grip new traders, and then before you know, they begin to lose their money, close their account on loss, and then money is being lost. And most of the times, okay, people will make profit, but they want to make more profit, huge profit. So greed now will enter them, and then the market might reverse against them, and they will lose their money. So deal with greed, deal with fear. Always have a daily limit. When you lose in a day, you stop. When you gain in a day, you stop. Always have a daily limit for your loss and for your gain. Always have a daily limit. Write down your emotions, mistakes, and what improvement. You need to write them down so that when it's happening, you need to what control and work on it. work on your emotions, mistakes, you work on it, and also what improve. Then you need to study trading psychology so that your emotions will be disciplined. You need to study what trading psychology. So guys, these are the 5 things that I have written down. This is the book, a special book. I don't give people anyhow. I don't give to people anyhow. This is a book. I've shared it in my platform because I love them. So guys, do well to subscribe and also share this video. Love you all. Love you so much. Take care, everybody. Thank you for watching this video. Do like, share, comment, and subscribe to this channel for more information.